honest truth is reality is really confusing. You have founders, promoters, as they used to be called, who have built in public globally. Richard Branson, Steve Jobs, and been massive successes or sometimes failures.
Yeah. I think there's a lot more sensibility now in building sustainable long-term businesses.
I think what founders become over a period of time, and the founders should realize that themselves, is that they become beacons of context and nothing more.
I think in terms of the kind of areas that is now available in India, first and foremost, the consumers are so digital ready that we have not seen that ever so far, which in a critical mass, which is then again going to allow you for creating very large companies.
Hello and welcome to yet another edition of Fortune India Boardroom, where we get some of the top minds to discuss some of the key issues of the day. Here we are in Bengaluru city, the hub of innovation and startups. And we have here with us on the panel, four of the sharpest minds in the ecosystem of startups and investing. And with me, co-moderating this session is, of course, my colleague, Rukmini Rao. Thank you, gentlemen, for being with us on this working day. May I start off on a broader note, talking about, how India is the third largest startup ecosystem in the world. It's got massive traction in terms of the DPIIT registrations. Lots of innovative work going on, not just in Bangalore, but in other places as well. However, I would like to know from each of you first, as we go around the panel, on what do you think are the key challenges for startups at this stage of growth for the ecosystem? I'll start with you, Pranav.
Of course, I think we've come a long way in the last 10 years. Since we started 314, India's GDP was 1.9 trillion. We're past 4.2 now, the fourth biggest economy, soon the third, and third becomes our default position, right, behind the US and China. So there's been 2 trillion of additional GDP, a lot of prosperity, a lot of success. The consumer market is deeper, the enterprise market is deeper. India's standing globally is obviously much more respected. But alongside that kind of growth comes challenges. You get geopolitical challenges like what we're going through right now, which is very interesting, out of our control. Every person here on this table has had to deal with second-order effects. At the startup level, you have fantastic founders like Abhay, for example, but he has 1,000 people reporting to him. HR is a nightmare, board management is a nightmare, markets change, GST changes, business becomes a nightmare like it wasn't harder already. So the macro and the micro starts having a larger effect, especially on startups. And today's founders have to deal with much more. From a surface area of threat and opportunity in a country that's 4 trillion. So I think we've come a long way to go, still a lot to do, but it's more challenging every year.
So as what you're saying is, as you grow in terms of the overall ecosystem, the challenges, new challenges are presenting themselves every day. Ananth, has that been your experience as well?
I think so. I also think the startup ecosystem is maturing, right? If you sort of thought about the 2013, 2014, 2015 era, right? I think there was sort of a mad focus on growth, consumption, getting the next set of consumers in, customer acquisition, right? Whether it was Flipkart, Myntra, all of that. I think there's a lot more sensibility now in building sustainable long-term businesses. And I think many founders are also on their second and third innings and so on. And so you actually are a lot more focused on building something that lasts, as opposed to saying, I'll just grow. So I think that's one very good change that's happened. I think the challenges are very similar. I think I agree with the challenges. I think there is opportunity. There's also a lot of threats, right? In terms of just lack of stability, right? Policy, geopolitical risk. I mean, we export a reasonable amount at Brand Me. And so those, I think, are harder to deal with. I also think there's a lot more companies now that are public, which I think is a very different phenomenon than 10 years ago. And I think that brings with it its own sets of opportunities and challenges. I think the public markets are unforgiving. I think they are also very transparent. And I think being able to deal with governance as well as how to be in the public markets is now an important skill for a founder, because I think that's an exit state that didn't exist, 10 years ago. So I think those are the big changes that have happened.
In fact, you should have played the role of moderator, because you spoke exactly about 4 or 5 areas which each of which we will go deeper into.
Sure.
Rahul, what is your kind of experience at this stage of the Indian startup ecosystem from an investor's point of view?
Yeah, I've been looking at this space for the last 15-20 years. I think the place where we are sitting right now is a delight for a venture capitalist. I think in terms of the kind of areas that is now available in India. First and foremost, the consumers are so digital ready that we have not seen that ever so far, which in a critical mass, which is then again going to allow you for creating very large companies. This compounded by their willingness to get on the digital rails, ability to pay, get onboarded very quickly on digital rails. I think it's a much smoother playbook for a founder to build companies now, which can scale very quickly. I think the thing we miss out, venture is about attracting global capital. Global capital is very efficient. It is the most riskiest asset class in the world. So it's looking for maximum returns. So Indian VCs also have to think about factoring in country risk and comparing with AI startup returns that US VCs are getting. We need to look at startups which are able to give comparable returns. And do we feel good about it? I would say we do at this point. And we are talking about returns in two forms. One is the time that it is going to take to return capital to investors. What is still going out right now in IPOs are companies which are 12 years old, 10 years old. What we're seeing now is you're getting to a good, stable financial model, scaling up startups in 6-7 years. So I think for me personally, that's like a very good sign of a venture system which can give venture returns comparable to the best in the world in record times. So that's very exciting.
So you were smiling when he said it's the best time for investors to invest. You've sort of disrupted a very, very, hardcore consumer business in that sense, and you've done pretty well for yourself. What has been your experience at this, and overall, if you want to talk about this stage of growth?
So sort of it's been like 10 years that we've been building a business which is possibly older than the oldest profession in the world. But look, I mean, I think what has changed in the last 10 years is that everyone has come to their senses. The VCs have come to their senses, the founders have come to their senses, the employees have come to their senses. In fact, to some extent, even the customers have, come to their senses. So I think in some time, these 10 years have allowed the playing field to sort of really flatten out a bit. And I think what that is forcing all of us, in some sense to do is, focus on depth. Because what happens is when the clutter cuts out, the impending hard problems will remain, right? And tough founders, believer VCs will stay put, and I think that's what I and Vivek have really seen playing out over the last 10 years, because there was this previous tendency in the eyes of almost everybody to try and classify you or see you as, are you the Uber of what? So you're the Flipkart, you're the Amazon of what? Today nobody's asking that to us, So today, in fact, I'm very glad that some people say, I'm doing a Licious of veggies or something like that, right? But the point is, I think those Western labels that were getting attached to Indian identities, Indian problems to make sense of such things, I think because things have sort of leveled out and all of us have come to our senses, I think this makes it a frighteningly difficult, but also a frighteningly exciting market for, deeply focused founders, even, VCs, bankers, everybody, I think, to build something of meaning.
So essentially it's challenges, but there has been a maturity.
I think these challenges these are better challenges. I love the challenge that I have in my hand today versus the ones that I was dealing with some time ago where, just because you had a tail, you were also a monkey or not, So I think that has really changed. So I think so.
Well, another part of scaling up also, especially in the Indian ecosystem, right? The founders have the brand value that is perhaps attached to the founders. Some of them want to be rock stars, and that's worked well for some. But when you're seeing some of these companies actually go public, right? Probably the value that comes with the founder out there. And you see some of them actually struggling with scale. And a founder might be good enough to take a company from 1 to 0. 0 to 10, and maybe 10 to 100. But the next leg of 100 to 1,000, if he's unable to do that, Pranav and Rahul, I want to sort of understand from you, how do you tell a founder to let go of his company, keep your egos at bay? If the brand has to survive, you need to go. And especially when it comes to listed entities, probably in the US, if you had ruthless, let's say, investor capital who will say that I need this guy out. What happened to Target like a few days ago? So the market economics and the dynamics in India haven't matured as we have seen. But should VCs step in at some time where, to be able to actually get the right value for you guys if the company has to go public?
Yeah.
Tell the founder that you need to leave.
Yeah, I mean, it's a very complicated question because the honest truth is reality is really confusing. You have founders, promoters, as they used to be called, who have built in public globally. Richard Branson, Steve Jobs, and been massive successes or sometimes failures.
Yeah.
And then in India, you've had quiet people like Mr. Murthy, Mr. Premji, all of them in Bangalore, just Bangalore I can start with. And they haven't had to be larger than life figures to build $100 billion companies. So you've seen promoters of different characteristics build success and fail. So there's no rule there, right? So what you do as an investor is you understand, just like Abhay said, you think about the fundamentals of this business and what does this demand of the founder today. What Licious needed Abhay to be in 2015 is very different from what Licious needs Abhay to be today in 2025, right? And mature founders, I think, and I've seen this in action, we've funded 130 companies now. I think mature founders, every year as they grow, they realize, I can't do everything. Wait. So the most mature of them say, I will make room for better people, one day to be CEO or chairman or a board member, independent, etc. Or I should become chief product officer, no longer be CEO. Some of them say, I should just step off completely, I'll get professional and so on. That's happening with India's public companies as well, VIP being the most recent case. So I think I stand behind the sentiment that maturity is something I see across the ecosystem. Now I'll give you the flip side. There are many individuals, founders, operators, even investors, who somehow seem to have this innate need to be in the public. And there's this big, it's called the build in public sentiment, right? They're on Twitter, they're on whatever. They have WhatsApp channels that get dedicated to them. They're big sponsors of large events across the world now, public weddings, public breakups. So I think if you diagnose that, a lot of them are still building really good businesses, right? And that means they have an L1, a leadership below them that's actually doing the day-to-day. They're very good at that job. And Ananth will know this better than most people. And the business is still thriving. So as an investor, you have to look at every business in its unique characteristic and figure out, therefore, what your judgment should be. And I must say the best founders who work with are the ones that see reality the same way. So not easy, no one answer, but you can make great value, large outcomes with all of these different types of people.
Rahul, as a VC, what's your take on that?
Totally agree with we believe in the evolution of the founder as well, right? From day 0 to day 1, there is, we are probably so averse to founder replacement though that, I mean, we would consider that to be a biggest risk or the worst even to happen in the life of a startup. But having said that, in year 10, if you're struggling to build repeatability in the business and predictability, which is the public market's expectations, then you need to, either go back and learn the playbook or bring somebody who knows the playbook. So I think the biggest gap we've seen in startup founders and public market founders is their ability to be consistent and kind of value not surprising the public investor. And I think that preemptiveness or the transparency then moves to, basically having consensus amongst analysts and investors about where your business is going. In our case, I think the learning curve is something that starts at the time where you are maybe 1 or 2 years after product market fit when you start bringing in the L1. And that is a very expensive experiment. Again, we've seen most startups fail with fundings of $10-15 million in the bank in just that transition period. And if that succeeds, then you're much better in a much better place to get to that pre-IPO stage where disruption does not happen too late in the game. So I think if you take in the early bitter pill of bringing in and making outsiders settle into your organization, and it's not an easy. We work very hard to make that happen. Just hiring is not enough. Making them successful is, etc. So that's a long playbook for us also that we're learning. But we think you miss that, then it's a much harder one to do it pre-IPO.
So is it easy to let go, Ananth, back if tomorrow need be for you to step down? Probably if you have to look at your own self, do you see emotions sort of taking over, or what would probably play on your mind at this time?
Look, I've been on both sides. I joined as the professional CEO of Myntra from
Right.
over from Mukesh and Sachin and Binny. And they were all there, and I have to say I think they did a phenomenal job because I think they put the company first. I think I was one of the first professional CEOs.
Yes.
I think gave lots and lots of room, and the board was supportive. I think that ecosystem was needed, and you need a maturity. I think not letting ego get in the way and doing what's right for the company, I think is important. So I always believe, I think it's a little bit it's stage of the company. I don't think there's an answer, there's one framework where an answer fits because you need founder passion somewhere. I'm now on the other side. I'm the founder of Started Brand Me. We have a great L1 team who's very sort of seasoned, has sort of had experience. But look, I mean, over time, what's the right answer? I think hopefully I intend to sort of do this for a long period of time. I intend to sort of run it and grow it. But you have to keep looking for successes. You have to keep looking for your team continuing to grow. I think that's how you build an institution. Otherwise, take a different example. Take Marico, right? I think you've done a phenomenal job, right, of professionalizing and sort of running it for 20 years and creating massive market value. So I think it's an evolution. And I think all of us as founders should be prepared for evolution because what you want to do is to maximize and create an institution. I think that should be the first goal, right? I think there are lots of those examples in Bangalore. I think you have to create an institution. All the rest, you do what is right for creating the institution.
Would that be the ultimate sign of maturity, Abhay?
I mean, I don't know. I'm just 38. I don't know what maturity. But I think to everybody's point, look, when Ananth, for example, stepped in and his role at Myntra, it wasn't as if Mukesh was incompetent. Mukesh wanted to do different things.
Yeah, absolutely.
So it's not so much about founder capability, really, because, founders, and, I can say that, that, look, all our eggs are in this basket. Pranav has 130 deals. I have one Licious, right? So I think this is my whole life. So therefore, I think in some sense, and, you're a woman, so maybe you will understand that, founders are like the mother of the child. And they have that maternal instinct. And so long as they want to keep doing right by the child, I think they can, they can continue to find the evolved role in the life of the organization. I remember starting off as a deeply operations intensive founder because, that's what the company needed. We had to fix a bloody difficult supply chain. We had such difficult problems to solve that somebody had to take the hard decision. And, that instinct that you have, that you build over a period of time, we call it gut, but what is gut? Gut is like an amalgamation of all your failures. You just don't want to, and successes maybe.
Sure.
And, you just learn from them. So I think what founders become over a period of time, and the founders should realize that themselves, is that they become beacons of context and nothing more. And I think they need to, dip in deeper themselves and say that, hey, you know what, there's no need for me to, looking at these metrics on a day-on-day basis because, somebody more competent can do that. And what is my best utilization in the context of this organization? I think if founders, and like Pranav said, I know every founder that I know, has this maturity. Very, 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 very few people who are like, so consumed by megalomania that they can't see beyond themselves. And of course, such people exist. Like all human beings, founders are not different humans. We exude the virtues of every sort of normal human being. There must be a journo like you, and there must be an absolutely batshit crazy journo who likes to hear the sound of his own voice, right? And they're doing a great job, right? According to the media, the press, and the TRP. So, well, there's no answer. I think the truth is that if the founder passion is required in the company and that founder intensity is required, you take the bloody founder out, I can promise you no professional number, because the professional will need to sort of really get inside that founder intensity to understand here, what does this mean and what does, therefore, how does this spark light the fire of this organization? I think that,
and that you learn by
being around the fire, being around.
You see, that's the point I wanted to ask Pranav also. The point is that in this kind of maturity, this maturity which you're rightly saying, that most of them, I mean, even people we interact with, obviously they have that maturity, they know how important then, Pranav, is the role of the VC or the investor in engaging with such founders constantly? In a sense, that is a mentor's role also, right? I mean, because the founder, like he said, he has all his eggs in one basket.
Yeah.
You have the benefit of experience of others.
Right.
So how important is it? Like he talked about the case of Marico.
Right.
Marico, Mr. Mariwala was very clear that he wants to let go, but he's available for discussion at a board level. His job, he says, is to engage with the board.
Right.
So what is the how is the dynamics now playing out
Right.
in today's context between the investor and the founder?
Right. So a lot of things have changed in 10 years. I will say 10 years back, very few people would have believed that these startups, these toys, these little things that make noise in economic times, whatever, they're one day going to go public. No one believed that to be true. Even early stage VC were hoping that was true, but we didn't know till it's happened, right? So early on, you said, okay, the goal here is growth. The goal here is prove a point. The goal here is show moats. You raise a Series A, Series B. But as the markets change, and as the Indian public markets have very clearly told us, we want more new assets, great businesses to come here. The role of the founder, the role of the shareholder in these private companies, in one day dreaming to go public, that has reached the next level. So what does that role today demand of you? The role today demands even of a seed stage founder to know about governance, to know about business integrity, to know about ESG, to know about one day I need an independent board member. What does that even mean? They need to know all these things on day one. No one is born with that knowledge, right? It's already hard to raise money, raise a seed round, hire your first team, take the risk, compete against a Google or a big Indian company or a bank or whatever. On top of that, you have this burden on the founder. So it's too much. It is too much on any human being. So good investors have started in the early stage laying out this template of what the next 10 years are going to look like, what the next 10 years are going to demand of the founding team, what role we will play in year one as a seed investor is very different from what role we play in year 5 when you raise $100 million if this thing has worked, right? So all of us are evolving our roles as the company goes through this life cycle. Secondly, I think on governance, I will be very pointed. Most founders didn't have to care about governance in the early stages because if you looked at the US, and that's the by far the largest market for innovation globally, $60 trillion market cap, right in the United States, they haven't cared for governance even when they were going public. If you remember Facebook's IPO, it crashed 50% in 6 months, some reporting was off. There have been all kinds of teething challenges, even for the largest, most sophisticated markets and the biggest tech company. So you understand that, yes, some things take time for a culture to seep in and for everyone to realize that is the true burden that we are building towards. And it's worth it. Because if you show governance, if you meet your guidance, if you manage the market's concerns about your business, they reward you on the upside and you get 60p, 80p, 120p. It clearly shows you that the market believes in your story. And that's why it's worth it. And lastly, I think we've also seen bad actors on cap tables. We've seen a lot of helicopter capital come in and go. They'll give you a massive valuation last week and then next year, those people don't even have that job anymore. So who's really answering for this capital, 100 million that just came in? So you had to, as investors and founders who are local and building these businesses, also have to deal with new risks that you didn't even imagine would be a problem. No one would have told me 10 years back, the $100 million coming into your company is a problem. I would have said that's a damn good outcome. That's a great achievement. 5 years later, when the partner who made that deal is no longer in that firm, suddenly, okay, who's answering for this 100 million? That's a problem, right? So I think you learn also along the way. And good investors, good founders care about the business. Because I'll close with this. In the end, the founder is the largest shareholder of that company, right? He starts owning 80-90% or the founding team owns 80-90%. When it works, when they're going IPO, maybe they own 20-25%. But the value of that 20-25% is hundreds or if not billions of dollars, right? So when a founder steps back to think like a shareholder, and when all investors, seed investors, Series A, Series B, whatever, when they think like shareholders, like fiduciaries, like we call formally, everyone knows your incentives are aligned to get the best discipline in and get the company to be the best version of it can be. So I think there's ground truths to anchor onto. Thankfully, like Abhay said, that maturity is there. And I think if we do this right, we will create $5 to $10 trillion of market cap here. We're $5 trillion today, we're going to double in the next 10 years. I think startups will be at least 20% of that. And that's a very, very big goal, big prize to work towards.
Do you agree with this thesis, Rahul?
So in our case, the playbook version of how life will change over the 10-year journey, that itself is a big learning for a founder in the 0 to 1 stage. I mean, they cannot see beyond the 1 year. That's absolutely a dark zone nobody wants to think about. I think what I was thinking when Pranav was saying is that one of the big benefits of IPOs as a legitimate, logical outcome of all the startup journey is now beginning to kind of take hold. That is the most sobering and the most solid, I think, end outcome of everything. So when you tie back everything to an IPO, your valuation needs to make sense. your organization structure needs to make sense, your governance needs to make sense. You are not just operating in a Bangalore vacuum of building this very sexy startup, right? So suddenly the lights are going on in a very dark room where what you're seeing at the end of this big hall is an IPO where you're going to be in the public eye and every quarter is going to be a tough quarter. So people are realizing that from here to then is not such a long journey. It's not a something that will happen to somebody else. It'll happen to me. And that, I think, in the last 2-3 years, I've seen do a lot of good. $1 to $100 million valuation. Founders themselves are now asking, can we sustain this at IPO? So not that there are too many investors offering crazy valuations, but that's become actually a internalized logic, which is very different exactly to this point that 100 million made sense to everyone, right? The crazy valuation, take $1 billion, I want to be a unicorn. 21, it was very easy to become a unicorn. You ask and you get. Because somebody wanted to put in 100 million, then that's why you become a unicorn, not the other way around. So now I think it's it's so well understood that there are more important things to build and to come back to fundraise at a reasonable valuation, to go out in a public where the public valuations need to be supportive of your last valuation. You can't be dropping off a cliff the moment you list.
Do you think in that sense, Ananth, the funding winter, oft repeated term, was both the worst thing and possibly the best thing which could have happened to the Indian ecosystem?
I actually think it's the best thing. Right? I think, look, at some level,
By the way, a lot of trauma.
yeah, it's trauma, but I think, look, valuation, I think a little bit, Rahul's point is valuation is a little bit of a vanity metric. That's it, right? Ownership is real.
That's it.
And I think the minute you realize that, and I think to use Abhay's point, it's your baby, your ownership in that is going to stay forever. And therefore, do the appropriate thing, take the least amount of capital that you possibly can in order to build what you're wanting to build. I think that realization, I think, is important. And I think a lot of founders, when I speak to now, have it. And I think that's a very, very positive shift, I think, in the ecosystem. I think the second, a little bit to your question of role of, governance and then role of investors. Look, firstly, I think governance and making that a 1-0 and what does good governance really mean, depending on the stage of the company, I think is a learning curve for most people. Right? And I think it's getting better. I don't think it is where it needs to be, but I think it's getting better. Right? I do think as a founder, you need to separate out capital providers, advisors, and board members, and who does what. And I think it's important to have the maturity. Some people just want to provide capital and don't want to get involved. I think they want monthly, quarterly MIS, and the numbers need to be going. There are others who are deeply involved and actually add a lot of value. And there's a third who is involved and may not add value. But I'm saying, it is important to recognize that and say, look, who is your advisory board that is actually useful? There is also a fiduciary requirement of it, which is fine, right? But who's the advisory board? And thinking about that, I would say one thing is, if I were to redo life, right, being early to sort of think about who is actually giving you advice and who's a good advisory board versus who are capital providers and owners of the company. And I think mentally separating those two out, right? Some overlap is of course okay, and I think it's needed, but it doesn't have to be 100% overlap, right? And I think that realization is important for founders.
Abhay, coming to you, I have a chicken and egg, to use something from you. I have a chicken and egg question for you. I mean, in the sense that when startups, whichever stage, however number of years they've been around, are going to hit the public markets, when does one actually, to take the points from all of the others who's talked about it, when does one start preparing for life at an IPO stage? When does it become very apparent that, now, not just to provide exits to your investors, but because the company has reached a certain scale and you need to broad base your number of investors, when does that process begin in your head?
I think the answer would be different for different companies and different sectors. Like if somebody's making, another shoe, then maybe his horizon or her horizon on exit and a point of view on IPO is different. But I think if for a company like us, who's doing category creation in a 3.5 lakh crore market, I think to pat ourselves on the back and say, oh, what, well done, 1,300 crores or whatever revenue, and this is the time to IPO. I think it's a bit short. What happens, I think, for people like us, and there were many companies like us back then, because the power dynamics were always lopsided. The founder was like, "Paise de do," and the VC was like, "Ki main paise de raha hu." So founders were not choosing VCs. VCs were choosing founders. There were very few people like Ananth who went on to become second-time founders. They almost must have chosen their board. Maybe people like me didn't have, that opportunity. But I think, because it plays out like that, then you've actually accumulated like a class of people who have very different expectations, right? I mean, somebody has a 5-year fund cycle, तो वो तो कहेगा कि exit दे दो, and there'll be somebody will say, यार बनाते रहो, it doesn't matter, बनाते रहो.
Yeah.
So I think it's at that time that the founders have to, sit with their, board and say, okay, hey, in the context of the problem that we are trying to solve, what does going to public markets mean for this company? So if this company needs more wiggle room for some more experimentation before it truly believes that it has broken out, right? Because eventually once you're in the public market, predictability of performance matters, having 1 or 2 hero quarters and then suddenly, not being able to repeat what you've done, that will not hold you in good state. So I think the answer is slightly nuanced, Sourav. I think so. I can say this to myself that when you're solving a, large problem, big problem, meaningful problem, and if you have investors who believe in the quality, in the size of the problem that you're trying to solve, I think the IPO date can really, can be timed from the period that you have delivered consistency of performance internally, at least for me, for 2 years. So the confidence here. I know how my, heart beats, my, what is my blood pressure, what is my blood work, what is my cholesterol. I mean, just the way we do health checks. I think we should have a full health check and confidence on our company कि यार अब हमारा बच्चा तैयार है इसको लेके चलते हैं public के पास. Yeah. But the public markets are brutal, boss. Right? I mean, if you are gonna, वो देते हैं ना कि time कर लो market को, heat है. I was with one of my good founder friends, and Neeraj, I was with Paperboat, and he said, भाई मतलब some investors are talking about IPO जैसे कि ना टेंट सस्ते में मिल रहा है और खाना सस्ते में मिल रहा है तो शादी कर लो अभी. It's it's literally like that कि यार अभी थोड़ा ना just because you're getting a cheap wedding hall you can't get married, right? So I think that's the point. At least
No. So for each one of you in your capacity, the recent set of IPOs that we have seen of the new age companies, what have been the biggest learnings? Pranav, I'll start with you. Like as a VC, has it shaped the way you are going to be investing for the next 5, 8, 10 years?
Yeah, I mean, the short answer is yes, for sure. So around 44 have happened from the last count I saw. We finished our first a few quarters back. I think a lot of lessons. So the first thing, I'll start with the good things. The good things is finally a tech company in India, an Indian tech company can go IPO in India, right? So Make My Trip had to go there, Freshworks had to go there. But now these 40, 44 plus have happened. That in itself is a great thing. Secondly, the public markets welcome these value creators. They think Indian innovation, Indian consumers, Indian business, Indian enterprise, great margins. They're willing to take that risk and they want to help you build a better business. They're not just traders of stock, but they want to help you take you to the next level, which is great. That ethos is there. And India has produced some of the best companies globally, like Infosys, HDFC, the best stocks to own for the last 25 years. So that sentiment that these can also be in that cohort one day over the next 25 years, that's fantastic to see. And lastly, I think for employees, for founders, for investors, the wealth creation, which companies like Infosys pioneered in the 90s, with ESOPs and so on, these guys have made it routine. And so much wealth creation is happening. The Flipkart millionaires, the Myntra millionaires, one day the Licious millionaires. That is fantastic to see. India needs that wealth expansion to be more consistent, per capita income, etc. So the top of the pyramid and the bottom feed-forward effects that is really important. Startups play a vital role. But the downsides, there has been some bad actors going public, tricks on valuation, false promises, misguidance. A lot of companies that weren't ready, like Abhay said, were forced to go get married. So there's also been a lot of that. A lot of the underwriters, the mutual funds and so on, feel a little let down, a little bruised, and now maybe a little bit angry. That's reflecting in the underwritings you're seeing recently, the valuations that are hit pretty hard, and the lack of confidence in some stories that are just more promise than substance, right? So the judgments have become harsher. And you're also seeing that as the public participates, right? Sometimes the expectations are too high. However good the company is, sometimes, the story is too good to be true. And even the founders, I've met a lot of founders who say, boss, what they're saying on the news and what I actually can do, there's a big gap here. How do I deal with this? So I think the reality checks in the public markets are brutal. They happen minute by minute, second by second. That's a very new experience for even VCs like us. We see us being right or wrong in 5 or 6 year timescales. Public market guy is wrong in a few seconds, a wrong trade, one button, 3,000 crores is gone, right? So it's a very different experience. And therefore, the mentality you need to have, understanding the pros, being concerned about the cons, and staying consistent, meeting your guidance, not making fake promises, and sometimes leaving money on the table. Maybe that's the most important thing, because that journey to IPO, it takes 10 years, say, for some of these companies. But they are infinite companies. I like Zomato calling themselves eternal, because it's not like IPO is the end of the road. You still have to keep on building forever, right? It's an infinite game. So to be right every quarter and to keep your promise every quarter, man, that's tough anywhere in the world. So the game never ends. The good thing is, if you do it right and you're a reliable team and you take your word seriously and your guidance matters, you are rewarded very well in India. That's why it's worth it. So difficult, but yes, a lot of lessons taken away.
Anand?
So a mentor of mine once told me that, going public is the start of the journey, not the destination. And I think you're exchanging one set of investors for another set of investors who have a very different time horizon, right? So I think for many, it's become a destination. I actually think it's the start. So I think thinking about this as one step in a very long journey, I think, to your point, is absolutely the right way to do it. I almost think the day you go ring the bell, the price is immaterial. I mean, for those who are selling that day, probably is, but I think as a founder and as shareholders who probably want to stay for long periods of time, it's one mark in a long journey, right? And you want to set it up for success. So I think being clear about what the next 8 to 10 quarters and predictability of those 8 to 10 quarters is not, Abhay, to build on your point, I think you have to be clear about your heart rate and health condition and all of that earlier for the last 2 years. But I think you need to be really clear that the next 2 years,
Also, you're going to stay.
you're going to stay there, right? And whatever guidance you give, you're like there. And I think that is the maturity that you need before you go public, because otherwise you're letting expectations down.
Yeah.
So I think at Brand Me, we're also trying to do this, but we want to get that clear, right? Saying what do the next 8 quarters look like, and only then do it, right?
Rahul, your thoughts?
Yeah, so I think we feel more certain about our thesis. I would say, from being very exotic, they become simpler in the way we think about how to invest in startups in India.
What do you mean by exotic?
The fanciness of the model is not what's driving our investment behavior. We're thinking very simply. Pranav started from the GDP growth. We're thinking by the time it gets to 8-10 trillion, there are certain tailwinds and certain or some pulls from the economy growth that are bound to happen in 2-3 areas. One is we have a very large mass of 500 million customers who are not served. Minimum account balance going up to 50,000 is a very good indicator of how older institutions are unable to serve the newer customers. The second one is the formalization of the long tail of small businesses in India, which need technology to become more formalized. And the third is the entirely new value chains that are getting created in India by accident or by force or by just India first. Toys were never an industry that VCs would consider, but now that we have to be domestically reliant on manufacturing toys, that's become an interesting sector. If you take all three, they are going to be major participants in this GDP growth. So what we are assured of by participating in these three areas is revenue pools and profit pools. The other reality check is VCs sometimes are more generous in valuations. Public market valuations are a big sobering down even for the way we think of numbers, and more importantly about the profitability. So I think it's a day one reminder for us: is this company going to go public or can it go public? It was never a part of the IC memo before. I think this question of its IPO-ability, as we call it, I think is a very important check for us, and that would mean some investor in Surat, by the time it goes public, will they be thinking of this as a good stock to own for the next 10 years or not? I think that's part of our evaluation now. I think a lot of backward flow has happened in terms of where we're going.
One of the storied fintech founders in India, when he hit the market and the stock did not do well at all, then came up with the idea or the explanation that the market did not understand the business model. So is that also a concern in some cases? Because these are all new companies. These are tech companies. These are innovative companies, which very different from the manufacturing companies or the other older, so-called old economy companies which the markets have been used to. Is that a concern, you think?
Simple way to answer that is, forget that founder, but what a founder is saying when they're making that statement is, oh, you guys are not sophisticated. Secondly, I came with X billion valuation, you paid for it, and now you have buyer's remorse. So I think this is shifting the burden, right? There's a simpler way to make this statement of novelty and so on. A lot of tech companies have the promise of additional revenue, retentive revenue, growth, expansion in the future. That's always true, yes? The nature of tech is the automatic deceleration of costs with therefore a higher margin in the future. A lot of the best businesses like Licious and what Anand is building have done that already to revenue lines. So this promise, I think all investors understand. But to value a promise at 100 PE and is nonsensical to us, right? So you have to be as a founder or an operator, investor, a leader, whoever, say, I have X, $1 million of revenue today. We should be valued like this. And I have Y $1 million of revenue in the future that you discount to and say value like this, and I get a combined valuation. To ask for 10 times that and then blame your investors for not being sophisticated is obviously never going to land well. I think there's a better way to do this. I think Indian IT companies, Indian banks, so many great stocks to own. Cement companies and steel companies have been, PSUs have been excellent stocks to own recently, right? If you see how they manage the market, how they land guidance, how they make predictions about the future, how they are careful not over-promising and under-delivering, but exactly the opposite. I think those are the lessons good founders take away, and then they build great businesses. They win the trust of the market. The market trusts them to say, okay, I should hold for 2 years and see this guy deliver the promise. That's the right way to make the same thing happen.
Absolutely interesting, Pranav. And you've been drawing, the parallels with Infosys. I mean, when they went public, the P's weren't this crazy.
Oh, yeah.
Right? So the value creation and the wealth creation that happened was gradual. But now, when the new age companies are trading at P's, which are like absolutely exorbitant, with some of them not even having, I don't know if they're going to be profitable, right? So
some of them, yes.
Yeah. So if that is the case, are we over-evaluating the amount of value to be creating? Because I'm already factoring in, 30, 40 PE.
Right.
So what a Infosys or a Wipro was able to do,
Right.
will these companies do for retail investors?
Yes.
That's the question.
Great question. And you answer this in 2 ways. One, you answer, why is the stock being run up if there is so much demand? It's not always because of the fundamentals of the business. Sometimes it's because there's no float. Sometimes it's because there's so much buying interest from, say, one country or one set of investors globally. Sometimes it's because some people have this notion that it's an Uber for X. They have a different thesis on the business, and so they're really very happy to pay up. So it's not always in the control of the board or the founder why his stock is running up this much, right? But at the IPO pricing is where it's the last time you have some control, some say.
Right.
Now, the best companies in the world, and the Infosys, HDFC, some of the recent IPOs, HDB and so on recently as well, they've left money on the table. They've very clearly said, if you're giving me $40 a share, no, I'll give it to you at 34. I'm fine. Let everyone make money. Right? And that means there's more demand for that stock. And, in a weird way, it actually runs up more after that. It goes to 60 or whatever. That happened in Infosys and NASDAQ. So we looked at all of this and said, some fundamental truths, leave money on the table, right? Number 2, if there are sellers and they have to sell, cool. There's OFS, there's methods to do it. Great. Let's use those methods. Let's give them a solution. Third, when new investors come in, if they're institutions, make it very clear to them. These are our plans. I hope we've answered all your questions. Let there be no ambiguity. And fourth, retail investors, you can't control if they're going to read every analyst note, whatever, right? There you admit, I don't have control. And so I'll do my best to make sure I publish everywhere and my information is now going to AI and Perplexity will give me an answer, whatever, sure. But, okay, you say I can't control that, right? So I'll control what I can control. I'll give my investors the best experience possible. If it runs up, I have to admit I don't have control. If it runs down, I have to do some damage control, yes. So in either direction, there's different strategies to use. But I think good founders know all this. I think there are some excellent examples in India's public markets now. I think Zomato, for example, is doing quite well. That founder has gone through a big transition. He's learned how to win the trust of the market. A lot of other founders are following suit. The role of the CFO has become very important. Suddenly, everyone's hiring a CFO and trying to hire the best person they can. These are all good signs that we can build the next Infosys, the next HDFC from this cohort of companies in the next 25 years.
Let's talk a little bit about governance, which is essential to, as we talk about all of these things, particularly accessing the markets. I'll come to you, Abhay, because of the fact that you are a founder who's very deeply invested in building your company. we've seen some very unfortunate cases which perhaps at some point have given the startup ecosystem itself a bad name. Policymakers have commented on it, and we've had a lot of problems there. And I'll come to you as well on this, Ananth. But first, Abhay, what exactly are the 4 or 5 things in good governance which you hold as tenets as a founder?
So I think, I'm lucky that I have another co-founder who is a chartered accountant, a Banya, and an ex-VC. And I think, so in some sense, I think early on, governance was, I think day one, I still remember 2 things. When we hadn't raised money from Pranav or anybody, when the money was getting debited from our FDs, I remember Vivek saying कि यार कुछ भी बस एक आधा ग्राम नीट भी नहीं बेचा था, बिजनेस प्लान भी नहीं लिखा, ये सर KPMG को रखेंगे. उनका क्या हो गया तेरे को, पैसे नहीं है. KPM कहता नहीं यार कंपनी शुरू करेंगे तो KPMG के साथ करेंगे. And that was the focus.
Yeah.
Right? I mean, on day zero, this company, nobody knows. You're going and paying, KPMG, right? Why? I think the answer is in this, that, I mean, look, me and Vivek look at it like this. Licious is our child. Maybe one of us is the mother, one of us is the father. Tomorrow, if my child goes out and, gives a gali in public, I can't say, Pranav, who's the landlord, he did not teach my child. It was not my VC's responsibility to teach my child कि भाई गाली नहीं देते. It is my job. So I think being very clear, I think founders have to own governance as a primary agenda. Founders can't say कि यार CFO देख लेगा. Founders can't अरे नहीं मेरे VC ने मुझे पूछा नहीं कि DD में ये 4 चीज़ें क्यों नहीं दी. नहीं ऐसा नहीं होता है. अगर मेरे ब्लड रिपोर्ट में है कि मेरे को कोलेस्ट्रॉल ज़्यादा है तो मुझे आपको बताना है कि मुझे कोलेस्ट्रॉल ज़्यादा है. So I think number one thing is that the founders have to own governance equally, with equal passion as they own the problem statement, the revenue focus, and whatever else. The customer, I think governance is as equal as your customer, right? The second thing is, we, like even today, I think this Mr. Mohandas Pai, and being with him from early days, this taught us. He used to say that, even when Infosys was listed and, such a big company, Mr. Murthy used to, he didn't have to, wait for me to, send him the MIS before the end of the month. So, the whole system had to work, backwards to ensure that 99.9% accuracy MIS will come, 0.1% we'll live with and we'll publish later. So, building some rituals for yourself, therefore, which will keep you honest and, and not, कि ठीक है यार 10 तारीख को MIS मेरे को आएगा, 15 तारीख को मैं बोर्ड को भेज दूंगा, बोर्ड मीटिंग नहीं करूंगा. So I think me and Vivek have not missed one board meeting in the last 10 years. No matter what. किसी की शादी हो गई, डेथ हो, कुछ भी नहीं. वो excuse ही नहीं है. Right? So I think if founders have 3 or 4 clear rituals, the top firms will work with you. Even when there is no fundraise happening, you will do your own diligence. You'll do, stat audit तो करोगे, internal audit भी खुद करोगे. तो अपने सबसे पहले तो खुद से सवाल पूछने हैं यार. किसी और को दिखाने के लिए थोड़ा ना कंपनी बना रहे हैं, अपने लिए बना रहे हैं. So I think having these rituals has really held us in good stead, कि never miss a board meeting. There is no good excuse to miss a board meeting, right? So I think this just, and then everybody sees that, right? Matlab, when you're not giving that excuse to yourself, how can anybody else say कि no, नहीं? When I can turn around the MIS of this entire company before the, first of, by the way, 15th of the month one MIS gets published, which is a mid-month MIS, and then another MIS gets published by the end. So how can anybody in my company tell me कि नहीं Abhay, this is not ready because इसने ना वो बीमार हो गया था, वो नहीं आया, उसके पास रह गया. So I think this is just role modeling, and I think day one, pick up some fundamentals and every day live them, no matter what. And then that's it, then it becomes culture.
Ananth, do you think at some point, because of this mad craze of 2021, and everybody turning unicorn every week, so there was some element of governance lapses and collapses because there was greed which generally took over the market, right? You can't shy away from that. You've been on both sides as an sort of founder now, and before that as an entrepreneur, as an executive of a leading company. Now, what is your sense? Where are we on this right now?
See, I think, firstly, I agree completely with what you said, right? For me also, it's a little bit, I have to own it. If I don't own it, nothing else will matter. And I don't think it mattered whether it was a professional CEO or a founder. I think, you want to sleep well at night.
Yes.
And life is short. So, just sort of do it. I think the thing I would add is, I think just transparency to the fullest. Because, by the way, crap happens. Things go wrong. I mean, it's just the nature of startups, right? something or the other, and you make a mistake.
Yeah.
Right? I send a weekly update. My top of mind priorities. I think to like 50 people in the company, I copy my investors. Like every week, right? And our MIS, again, very similar to you, goes out twice, right? So it just, by the way, at least you don't worry about these things, right? I think so. That's number one. Number two is from an investor standpoint. I do think sometimes this feeding frenzy happens, right? Which is, we bought a bunch of brands, right, as brand me, and then we scaled, right? Go buy more because you have more money. There's a push, right, saying, what are you doing? And I think as a founder, having a little bit of a maturity to say what I can and cannot absorb and digest, right, is important. And I think that has helped us in good stead. I think many companies started, several of them are gone. The reason for us is, by the way, we didn't go buy when we had money, right? And I think it was an important so actually internally saying whatever your board says or doesn't say, what I am comfortable with is all that I will do, is the other thing that I think is really needed in my mind, right? So even though there's a feeding frenzy or whatever, I think just saying, here's all I can absorb. So I won't do more. And it's pain, but it's okay, right?
Rahul, your perspective on this?
I think there was a dangerous pattern that was getting developed in 21, which was a rara culture that investors were
Cheerleader.
practicing just to become more popular amongst the founder. And the cheerleaders don't ask tough questions. I mean, to a point where the habit just doesn't develop, or it's very awkward to ask even a question. Forget about a tough question, even a question to a founder. I think that was the zone we were in 21, because there were syndicate deals. So there was no lead investor. There were like 20 people doing around, but nobody was actually a large owner to even bother about that investment. There were so many investments where it was almost like a portfolio getting built, but nobody caring about what was happening in those companies. So I think now we come back to, you see again, this being the most riskiest asset class. It was designed to be done in a certain way, which is there has to be a lead investor who has to take onus for asking the tough questions, and also then having the maximum buy-in into the chances of success. So they become, after the founder, the next best spokesperson for what's going on in the company. If a board member or a lead investor can't say what is the state of governance, then that is also a problem. It can't be relying only on the founder saying I'm well governed, because as an investor, we do double up as the governance keepers. So our view is, if you're not asking the tough questions, there are great founders who are thinking about themselves, but in most cases, it's like I'm saying, there's so much going on. There is, this governance is the last thing on a founder's mind. And until you get to, there's also a big gap in the way late stage investors manage companies, or they are really good about fundraising, M&A, IPO, but the board process is actually very loose. Even then, the rehearsal for the IPO is totally missing, and that also gets muddled up by early stage investors doing late stage deals, hedge funds doing late stage deals, where they're not used to a board process, so it never gets developed. So hopefully, I think we are in a much sober time, so things will fix. Lead investors will take board seats instead of just asking for board. We have board rights, but most VCs don't take board seats, which the annual accounts get signed without board, without the VC signing off on that. So these are practices which in a very large expanding market are missed out, but these are things that need to come back.
To that extent, I think the public markets will be a reality check.
Yeah,
it is already there.
Yeah, sooner than later.
Yeah.
Absolutely.
Yes.
I'll give you a counterpoint on the markets. It's interesting. 2021 is going to happen again, for sure. It may not be, how many 40 unicorns in a year. It may be 20, it may be 60, who knows, right? India is going to be a way bigger economy. They may suddenly, the whole world may realize actually there's only 3 growth markets left, right? So many other markets are not growing anymore, and population collapse and whatever. So this is going to happen again. Markets are cyclical. People have short memories. It looks like 1999, everyone's forgotten. 2008, everyone's forgotten. 2021 will also get forgotten one day. Smart companies.
It's an ominous thing.
Oh yeah, no, it's human nature. This is inevitable. You study markets for 200 years, from the tulip craze in the Netherlands to 2021, crypto nonsense. Crypto's back, Bitcoin's now 10x of what it used to be. So this is human nature, right? Greed and fear will dominate. The smart founders, the smart investors will do 2 things consistently across boom and bust. When the window is there, when money is available, take the capital, take how much you need, and never pretend it's going to keep coming at this rate forever. Hold on to the capital, strengthen your balance sheet, give some competition when the cycle goes down, be strong, go public at the right time, have optionality to go public, because if you have money, then you don't need to go, you're not desperate for going public for the wrong reasons. So I think using the up cycles and the down cycles to your advantage is what makes the best companies last over decades. We have Apple at 3 trillion, Nvidia at 3 trillion today. These are not 10-year wonder kids, right? These are 30, 40-year-old businesses. They've gone through hell to get to 3 trillion. But some of them are now larger than nation states. So if you want to project India forward and you want the Abhays and the Ananths to be not one unicorn, 1 billion, 2 billion, but 50 billion, 100 billion type companies in India, when India is a 10 trillion market cap country, which is double from here, they have to think like this. And they have to think 25 years ahead. And you have to therefore respect the Americans and the Chinese. They build those types of companies, right, with local capital. We'll play that game soon. It's inevitable. And we need founders to not just worry about, okay, I'm so worried about 2021 and 2 million months. No, take advantage of the situation. These are market cycles at work. You will work through them, right? Take advantage in the good times. Be careful in the bad times.
Yeah. We're running out of time. Just one round of quick questions, 30 seconds. At this point, we're talking about the third largest ecosystem, the GDP growth, which Pranav spoke about. Where do you see, say, 3 to 5 years down the line, the Indian startup ecosystem? What are the 2 or 3 key attributes you think the startup ecosystem will have? I'll start from you, Abhay.
We'll certainly have more companies in the public market. So I think for a lot of people in the college, they'll be great role models, in the recent memory. I think I remember when I started building, the only guys we thought were businessmen are like on the, cover page of your magazine, Ambani, Birla, Adani, and we couldn't relate to these people, They seemed like far away in some distance, sitting in a big palace, wearing expensive suits, and not hanging out at Church Street Social, drinking a beer, and I can say, hey, Abhay, I'm building something, I want to talk to you. So I think the one good thing will be that a lot of role model founders would have emerged, and therefore a lot of good entrepreneurship, sort of what good entrepreneurship looks like, feels like, how to invest, not to invest. I think many of those things will be clearer 3 to 5 years out. I think the other thing is 3 to 5 years out, my sense is that more and more people will start building for India. I think our place in the world is often shown to us by some big boy sitting somewhere saying, mind your business. Otherwise, I'll do this. If you don't do this, I'm going to rap you on your knuckles. I think it's time for India to realize that we are a great civilization, a great country filled with such amazing people, Pranav could have been a great entrepreneur, so could have Rahul been. There's so many such people, right? I could have been a good VC, who knows, right? But the point is, this is India's time. And I really think 5 years out, many people will move away from solving these incremental problems. And, how China takes pride in, basically saying that, what हमने फंडामेंटल्स ही शिफ्ट कर दिए हैं, हमने तो नेशन बिल्डिंग ही कर दी है, राइट? आई थिंक नेशन बिल्डिंग के लिए स्टार्टअप्स इमर्ज होने चाहिए, होंगे इंडिया से. आई थिंक
we have more Indian VCs, you think?
Yeah, I hope more VCs, entrepreneurs become VCs, or VCs sort of also get some entrepreneurs. The good, I mean, it's for the people that's sitting here also, na? अभी जैसे प्रणव है, Pranav is not an employee VC. Rahul is a founder VC, so it's not I'm sure there's a difference, Rahul, and when you were a VC working for somebody else's firm. And so this is a founder VC in some sense. You're the VC who's a founder, right? So I think this is good. If we will see, more and more VCs getting more and more founders, and, that cross-pollination happening, I think we'll be in a great state. And I think the big thing that I hope will change, and I'm sure will change, is that founders will stop chasing this unicornism, This is that bloody corn that, you can never digest, the horn of the unicorn is, where, so I hope, we stop chasing that and chasing real value creation. Enjoying building, just enjoying building. What's the point if you're playing every day to win, and you've forgotten how it feels to play, to enjoy? I think those should be the big changes that I want to see, and I'm hoping will emerge in the next few years. Rahul?
I think we've been struggling till maybe 2018-19 in terms of having all the right ingredients for building very large outcomes in VC. If one thing was there, the other was kind of slowly coming from behind. Now I think that to build $100 million revenue company very quickly, the founder has all the access to the right set of customers and the right set of capital. So my sense is that we are going to see much more acceleration in real revenue scaling up much more quickly for startups.
No,
Because what we've been lacking, lots of interesting stories, very good founders, but when you look under the cover, the revenue growth has been anemic. It's kind of sputtering or it's taken its time. I think now last 2 quarters I'm seeing amazing data on, let's say, consumer startups, consumer internet startups. Their revenue numbers month on month have been scaling. I have not seen that kind of growth across the board. So I can see some evidence of, maybe it's UPI, but there's a lot of revenue growth happening with consumer startups. So I'm just seeing that we are now in a place where for the next 3-4 years, what we'll see is a lot of $100 million revenue companies come out from the startup ecosystem, which is real solid revenue, right? If you have to go to a BeckerCon at some point from the startup ecosystem, you have to see that evidence of being able to take very large parts of the revenue pool away from incumbents, away from old world, and then drive it very quickly. So I'm hoping to see that.
The second, creating new markets, Rahul. I think guys like Abhiraj, for example, have created created a category where you wouldn't have said there's a TAM. I don't think there was a TAM before. Guys like Abhiraj came and did what they did.
Yeah, Lenskart.
Yeah, Lenskart. Yeah, I think there were these. I mean, okay, but there are these problems that where people may not take share from old economy or incumbents or whatever. But I think we'll create an organized way of buying something, and I think India deserves truly India companies. Yep.
Absolutely. Ananth, your views?
So 3 things that I think for me. One is I think we'll create a lot of India going global. So by a little bit of a slightly difference, I think, we're trying to build a newer version of Unilever, right? We're trying to build consumer brands that can go global. And I think that will start to happen. I think people will have global ambitions. Not say I want to sort of be, 1% player in some place. I want to actually lead. I want to sort of own a category globally, etc. Right? So I think that will start to happen more and more. I think the second is I hope there will be companies that not talk about $1 billion valuation, but $1 billion of revenue.
Yeah.
And $200 million of PAT. I think that will be quite amazing, right? Because you're then generating real value.
True.
That I think whatever the valuation is, it doesn't matter, right? And I think you're starting to generate real value. Third is I actually believe there will be a lot more domestic capital. I think there is real wealth creation happening in the country. I think people will start to sort of plow that back. You saw that happen, right, in Silicon Valley, in the US and so on. I think a lot of that will start to happen now as you see founders, the first generation of founders who've sort of created outcomes have started doing some of that already. And I think there will be more and more and more of that happens.
Yeah. Good. I'll give you pros and cons. I think on the upside, we will see at least 100 IPOs done in the next 5 years. So we're 44, 45 today, so double. We built 6 companies that have gone to 1,000 crores in revenue the last 10 years. I think we'll do at least double of that. So we'll have 15 to 18 companies in the next 5 years. I can see that already in our portfolio. They're called fund returners because they make you a lot of money when it finally works after a lot of pain, but that's why it's worth it, right? On the downside, there are 2 things that still concern me. I think we still haven't given young people in India the confidence that other large economies that have reached our size have given them. We don't value them. We in school they're not valued. That this is mass, 60 people in a class, etc. I went to a school like that. I'm sure most of you did.
All of us.
Reservation came in when I was in 10th standard. Suicides. We've been through hell growing up here. Right? It's not been very pleasant to be young in India. I'll be very honest. From a system point of view, that should not continue. Right? I think we're much richer now. We have to mend these things. And we need a more sensitive policy to Indians, not just for manufacturing industry, market. Sure, we're getting good there to Indians, right? So the human element of governing a country of 1.5 billion people is, for me, the only last risk left. And if we change that, if we're more active citizens, it's a very active democracy, but we have to become active citizens and demand more. I think as that happens, as we get more prosperous, nothing stops us from going to 10 to 20, 25 trillion over the next 25, 30 years. So lots to fix, lots to build, very optimistic, obviously. And I'm hoping a lot more of this gets fixed faster.
So there you have it. Lots to fix, but also lots to build, and a lot of positivity and optimism as well as India really marches on to 2047. powered, hopefully, in a lot of ways by the startup ecosystem, a lot of which we've discovered today and discussed over the last 1 hour or so. Thank you so much, gentlemen, and it's been an absolute pleasure. Thank you. And it's been an absolute pleasure speaking with you. Thank you, Dhanjeet.
Thank you so much.